Welcome to MarketSnap's daily market rundown. Today, the AI trade everyone's been piling into is suddenly cracking, and the money is flowing to a completely different part of the market. We're talking a historic rotation that's reshaping portfolios as we speak. Let's get into it. The major indexes told a split story today. The S&P 500 and the Dow were essentially flat, with the Dow even touching a new intraday record earlier this week. The real action was in the Nasdaq, which is on track for its worst week in months, now more than halfway into correction territory. The Russell 2000, however, bucked the trend, finishing slightly green. That's the rotation in a nutshell. The tech wreck was brutal, especially for anything related to memory chips. SanDisk, Western Digital, and Seagate all got hammered, dropping over 10% each. ON Semiconductor plunged over 20% after announcing a big acquisition. The selling was broad and deep, hitting Qualcomm, Texas Instruments, and even Bloom Energy, which tumbled 18%. This wasn't a one-off, it was a sector-wide reassessment. But while tech burned, the rest of the market marched on. Healthcare was the undisputed haven today. Eli Lilly, AbbVie, and Johnson & Johnson all hit all-time highs. It's a clear signal that investors are ditching the AI hype for the safety and earnings power of biopharma. Even beaten-down names like Snowflake and Datadog saw big bounces, but that looks more like a dead cat bounce than a trend reversal. Zooming out to the weekly picture, the pain in AI and tech is even more stark. Cerebras, CoreWeave, and Oracle are all down double digits for the week. Palantir is now the most oversold mega-cap tech stock. The message is clear: the all your eggs in the AI basket trade is finally cracking, as one VC put it today. On the flip side, the weekly winners are a masterclass in rotation. IQVIA, Thermo Fisher, and Danaher all surged. It's not just healthcare. We're seeing money flow into industrials, financials, and even some consumer cyclicals. This is the broadening out that many have been waiting for, and it's barely begun. The big story driving all this? A perfect storm of macro headwinds. First, inflation is back with a vengeance, topping 4%, which has the new Fed chair, Kevin Warsh, talking tough. Second, President Trump threatened a 100% tariff on Europe over digital services taxes, adding a fresh layer of trade uncertainty. And third, the memory chip crunch is real, forcing Apple to hike prices on iPads and MacBooks, which is spooking the entire consumer electronics space. Even within the chaos, there were some notable movers. Microsoft was a standout, adding over $100 billion in market cap today. Coca-Cola and Verizon provided safe harbor for dividend seekers. But the real story was the sheer volume of selling in names like Vertiv and Howmet Aerospace, which are critical to the data center build-out. Looking at sectors for the week, the rotation is undeniable. Healthcare and real estate were the top performers. Technology and communication services were the clear laggards. This is a textbook rotation out of growth and into value and defensives, driven by the fear that the AI spending boom is peaking. Looking ahead to next week, we have a few key earnings reports on the calendar. Keep an eye on Darden Restaurants and McCormick for a read on the consumer. Nike also reports, which will be a crucial test for retail. But the big one to watch is FedEx Freight, which just reported its first quarter as a standalone company. You can find exclusive earnings transcript summaries on MarketSnap. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. This market is sending a clear message: diversify or get left behind. Don't forget to check out our SWOT analyses for deep dives on the stocks moving your portfolio. We'll see you back here tomorrow.